and we're going to explain what's going on with Miratai Therapeutics.
Okay, so have you gotten into
I talked to him a little bit about Timothy posted a question,
Okay,
and he was trying to figure out what was it good too good to be true is what he was trying to figure out.
right. So we've definitely got this flat section right there. So that's why it's showing up on those screens. You can see how it's just has a history of going, what is it, up to 80, all the way down into the 50s, back towards 80, back down, spikes, and then right there, just basically the last 2 weeks, it's just been, and if we just change the perspective here, we're going to go to the chart type and go to close, and you'll see it's really flat right there. I mean, just dead in between, right around the 105. So that's pretty interesting. So what it was curious because let's bring in the implied. Have you looked at that yet, Brian?
Nope.
Okay, so this is the implied volatility of the 1 month, and what I wanted to look at when you see something like this, and it's particularly around earnings, you need to do a little bit more digging when something has that too good to be true type look to it. And so the first thing I wanted to do was I wanted to go, and you have a lot of charts over here. You have this chart that obviously the historical moves of the stock show that it has a tendency to move way more than the options are expecting, and these are for the next month options. But we can go further out and even look at we could hit a different month, and you can see that too looks like it makes a lot of more big moves. So we can observe that. And this is the volatility term structure. And so when I look at stuff at earnings time, this is one of the first things that I look at to see how soon earnings are expected. And this usually gives us an indication. And you can see the volatility for August, it's 49. The volatility for September is 46. And then the volatility in October is 67, almost 68. The volatility for November is almost 85. So clearly, the market is expecting relatively low volatility for the next couple of months. Then it's expecting volatility to pick up. And by mid-September, it's expecting volatility to skyrocket. So that prompted me to want to look at the news. And let's see, do we have, no, we don't have a link there. Let's go to news, and I'm just going to, because I want another panel here. And I'm going to actually go to NASDAQ, MRTX. And they expect earnings in just about a little over a week, about 2 weeks. So there is an expectation that the earnings aren't the thing, right? It's the August and September options are cheap, but earnings are coming out before the August options. So if everybody was expecting the earnings announcement was going to drive the stock crazy, that's not what's happening, because the earnings are coming out before the options, so you should get the big move, like Coca-Cola.
Yep.
Coca-Cola came out with earnings. We got a big move in Coca-Cola, and that's what people prepare for, the big move on earnings. So the expiration that is the closest one that follows the earnings report, that's the one that's going to have the biggest volatility. But that's not the case right here. So the next thing I wanted to look at, well, what's the skew doing? And so I went down here to the skew, and here is the October 16th skew, and you can see it is relatively low near the at the money options, and then it starts to drift higher here and higher as you go to the further to the lower strikes. But that's not the one that had the big implied volatility. So I went back to settings, and I went to the November 15th, and I clicked that one. And let's close that. Now let's look at the skew chart. And it looks completely different. Where the other one, which they tend to call that a smile, where it was up and down, up then down then back up. This one is just a pure skew. So that is to me pretty darn interesting. Anyway, so that got my attention right there. And then I wanted to go to the option chain and take a look at the options here. And looks like you've already got these things loaded up. You've got the bid-ask spread is kind of wide. It's not terrible, but it is pretty wide, folks. It's so the options are cheap relative to the price action of the stock over the last 4 years, but clearly the options market is saying the action that we've seen over the last 4 years is not going to be repeated between now and August options expiration, or even September options expiration. And then the other thing I wanted to look at was the November options. So the stock is 105.63. Everybody see that up here at the top, 105.63, and Mirati Therapeutics. And I want you to look at the strike prices here. There's the 105, the at the money, the 110. And let's go down and keep going and going and going to the 55. The thing actually has a bid. That's it. So they're talking about this thing getting, basically they think the stock's going to get cut in half. The stock has to get cut in half for, not quite cut in half, but pretty close to being cut in half. It's got an ask of 380. So there's a pretty big bid-ask spread right there. But the fact that it's got volume. It's got open interest. People have bought this option.
Yesterday.
Yeah, that wasn't yesterday. Now, it could have been the market maker that bought it. Maybe somebody sold it. Or maybe somebody bought it expecting, well, what if that VIP price, the public price, becomes the price? And suddenly the thing goes down to 62. I don't know enough about the deal, but there's some other things that stick out here. And I want you to look at this open interest. There's 4,000 right there, which is $20 below. There's 4,000 right there, $40 above. Somebody's got a strangle on in big size. And then you also have the 2,000 and the 2,000. So somebody's bought the 115 and somebody sold the 150. I don't know exactly what's going on there, but somebody, and I don't know who bought it or whether they sold it. I mean, did they sell the 115 and buy the 150? I don't know if that's
Somebody bought it and sold it.
Yeah, well, yeah. Yes, somebody bought one and sold the other. So, that gets into a whole different thing about market makers and all that stuff. But at any rate, so there's definitely a strangle going on. I mean, that's very obvious. There's a handful of people that are expecting the stock to get cut in half. The thing that, if there wasn't the public offer, what this tells me, especially this chart right here, tells me that there is something. Just think about what these guys do. Their first name is Mirati. Their second name is Therapeutics. There's something going on in their drug trials that they expect to have some kind of result that they're going to be presenting sometime between the September options expiration and the November options expiration. It could be the fundamental event, or it could be a drug trial. I don't know which one it is. They're a small company, and they're really hard to find information on. But when you see this, folks, when you see this, where you've got the real low volatility, and then you've got a spike in implied volatility right there. And another way to observe that is you can do that by, let's just go to a one-year chart, and you see this right there where it picked up, and then you see another instance where it picked up right there. Well, let's just think about, we're in July, so those expensive November options would be, so August is 1 month, September 2 months, October 3 months, November 4 months. So we could chart the 4 month implied volatility, and this is pretty interesting. You see there's the 4 month is at 89 and the 1 month is at 58. If you're looking over here in the bottom left hand corner of the software, and you can see they started flipping spots right there as you got closer and closer to the announcement, and then the announcement came and they both dropped. Here again, you started to see the separation where the 4 month implied volatility held steady, and this thing started, then the 1 month started to rise above it, and then they came out with another announcement on some results. And now, so since June 4th, they were almost identical, 70.13 versus 70.81. The 4 month has climbed to 84, and the 1 month is going down to 47. So the 4 month, the volatility of the longer term options is climbing, even as the implied volatility of the short dated options is declining. And that tells us that there's an expectation of an event coming forward. So you got a couple of ways to observe that. These are some of the things that we don't use a lot in the software. You know, this is, you know, for lack of a better, this is high level stuff.
Yep.
But this is the software does a fine trade, yeah. Does it have great scans, yeah. But it does so much more than that. And this is just one of those things that allows you to do some deeper digging.
And it can even tell you. So it's like we're using it to do some detective work to figure out why does a straddle on MRTX look different than other things.
Right.
And we can investigate. And the good thing about this is it'll actually give us, we could zoom in. So I've showed you in the past how to search with Google to find news articles around certain dates. So if you wanted to find out, we could use this data right here to tell us a date to search for in Google.
Yeah,
and then we can
Monday, October 22nd,
yeah,
2018.
and then we'll find a news story we'll likely find a news story that's going to tell us what's going on around that date.
It was a disappointing drug trial result. And then you go to the other one, and it was a good drug trial result.
Yep. And if we go and try to figure out what's going on right now, some of the news that might be what's driving this maybe potential announcement coming up in the future.
I think it's really interesting. I really appreciate the question that we got because it really gives us an opportunity to show off some of the other things that Odds Online is able to do that a lot of users may not have anticipated.